target questions. Do you have a predefined target for all your trades, or do you exit live, or do you
Well,
exit based on discretion? What is it?
well, it depends on a swing trade. No, but certainly, and certainly in the stock market, not. But certainly, I would look and be very, very aware of Fibonacci targets based on daily projections. For
So you
example,
don't put a target when you enter. You don't.
no, not, but I'm
All right,
aware
got
of
you,
them.
got you, got you.
For example, today the Australian dollar against the dollar went up, and it stopped at a 78% retracement of the last range, and certainly that would have been a good place to have taken some profits in any longs. So I'm very aware of major Fibonacci levels on the daily chart, and monitor those levels. And if I was up good money, and I was up in very good money long of the Aussie dollar, then that had been a good place to have got out of the trade. I didn't, in fact, and I got out on a stop loss which was placed in the market. So I give a little bit back there, but it's not the end of the world.
So you either exit live or you either come out on a trail stop loss. Is that right?
Mostly on a trailing stop loss, certainly
Mainly on. Okay, okay.
certainly in the stock market, in swing trades in the stock market, on the trailing stop loss. But I am very aware of, and on the Aussie dollar today, there's a particularly good example of a harmonic fib pattern known, given the name by one of my best friends, a big fella called Larry Pesavatis, as a Gartley 222, made famous by a chap called Harold McKinley Gartley about 100 years ago. That was, in fact, it called the Aussie dollar to the tick this morning, in fact.
Wow, wow, wow,
falling down. So I have a very good knowledge of harmonic patterns, and I'm very aware of the levels from those patterns. There's not many of them, but I'm very aware of the harmonic patterns. And
I'm sure you'll be very keen to see all of that on the chart. So let me just quickly go through this. Any quantified exit parameters that you have that you want to share with the audience, or not? Not particularly.
No, the fib patterns. I doubt if I can get through that in half an hour. But the fib patterns. If I was going to get out of a swing trade and I saw a major fib pattern, then if it was Friday, then I would be tempted to exit the position. I don't like to hold them over the weekend about a hand. So if I saw, for example, if the Aussie dollar had been pushing up towards that 78% level and it was Friday morning, I would have taken the profit then and there.
Got you.
It was early in the week, so I didn't. And in fact, I've been working hard at Vector Vest stuff recently, so I didn't actually see it. I mentor some students on the forex market, and one of the ladies, in fact, emailed me this morning in a real excitement. She says, "Is this a Gartley 222?" And
nice.
So she's in fact in the middle of reading Larry Pesavatis' book at the moment, so she got the Gartley spot on. Love my harmonic patterns. Not for everybody. But they've been very, very good to me over the years. My very, very first public call, this was in South Africa, France, maybe you'll remember it. It was on Harmony Gold Mine, and Harmony Gold Mine had just charted a perfect butterfly pattern, and at 29 South African rands, and I called it in a live forum and on on Business TV down there at 19, and in 6 weeks it went from 19 to 120 South African rands, and that was based on a butterfly pattern. And I got 1,000 questions. In those days they were in fact letters. How the hell did you do that? And that was just based on a harmonic pattern. There's lots and lots of stuff on the internet on harmonic patterns, folks. Not easy to get your mind around, but well worth making the effort. It takes a long time to be able to see them easily.
David, a very quick question, yes or no question. Do you scale out on your trades?
Depending on the market itself. In the stock market, we had a situation prior to this sell-off where the stock market itself was going nowhere for 2 or 3 years. It was stuck in a trading range, and in that period, I found in the stock market that it was useful to scale out of positions. Yes. So
Right. Okay.
if I see that the market is stuck in a range, then I would be tempted to scale out of positions, and that's in fact what I recommended to new people. Now, there are the old question: do you scale into positions or do you scale out of positions? There's no answer to it, because I know many people that are exceptionally successful, and one of them scales in, the other one scales out. I think that if you've got the stomach for it, adding to winning positions makes much more money, but it's just so much more difficult to do, because you buy a share at £10, it goes to 12, and the chap who scales out, he takes off half, gets a stop to entry, lets the other half run. And maybe he'll get a runner in the second half, but if it falls apart at 12, at least he's put £2 in his pocket for half the position. So he goes to bed happy, and he's content. He's been right, which is probably more important than the money. Whereas the chap who's adding to the position, he adds to the position at 12 and the whole thing falls apart. And he goes to bed kicking the dog. So it's just so much more difficult to do. So certainly for new VectorVest people, brand new VectorVest people, until they get a feel, I actually asked them to scale out of positions, especially in the market that we had that was stuck in a range.
See, David, I totally agree with you on that, because even on our live trading sessions that we do, we advocate actually scaling out, because you see, at the end of the day, like you nicely pointed out, you want to go to bit content, and that's what gives you the psychological strength to keep going forward, is it not?
Well, that's correct. There's no doubt that scaling out is much easier to do. You feel good. When you feel good, the whole process, in fact, grows.
Beautiful, absolutely.
But it also means that when you're wrong with a full position, and
Yes,
when you're right, you're only right with half a position or less.
Yes.
And mathematically, that is not as good. But nevertheless, both methodologies can be used exceptionally successfully. If you scale out, okay, and for new people at VectorVest, I recommend that if you buy a share at £10 and you put the stop loss at 8.50, when you've made as much as you've risked, in other words, the share has gone to 11.50, bank half, get your stop to entry, and then let the other half run. Now, the methodology is successful and profitable only if you've got the testicular fortitude to actually have a very loose stop or no stop at all on the second half. Okay, and that's what I try and get across. So the scaling out is only profitable if you can keep your sweaty little hands off the second half. Get your stop to entry, and then have a very loose or hardly any stop at all on the second half. If you chicken out of the second half too quick, and you don't get that 30% that are going to be big runners, then it's not a profitable strategy at all.
Absolutely makes sense, because the math's got to work as well. You're absolutely right. The final question, which actually was inspired by in the New Market Visits book, which is actually a litmus test to our system and our execution, is this question. So, and I want to ask you that. I mean, do you feel at peace when you exit most of your trades? Like you said, do you feel content, or do you regret sometimes for coming out early or late?
Yeah, sometimes you get out on a Friday and the thing gaps further on the Monday morning, and you say to yourself, well, why didn't I hold the bloody thing over the weekend? But no, I don't get upset about that anymore. I just shrug my shoulders and move on and look for the next trade. I get upset if I make a mistake. I make an obvious mistake, and maybe I should have seen that 78% level in the Aussie dollar this morning. Maybe that was an obvious mistake because I wasn't working hard enough. I had webcasts and videos to do. I should have maybe seen that. So, but no, I don't get upset about things, especially if the market does something silly. I get upset when I don't follow my rules. That doesn't happen that often, but it does happen. It does happen.
That's brilliant, David, because I think that's the mark when all the traders start to see that they are really improving and growing when they're at peace in following the system rather than just jumping in without a system or a plan, and then of course then this regretfulness or this sometimes getting greedy just to stay in a bit more starts to happen. So that's definitely the mark when we can start to see that we are really growing and we are, as a professional trader. In terms of psychology, just one quick question I want to ask you before we go onto the screens is, do you do any kind of practice to work on your mind for consistent execution?
Yeah, it's called the gymnasium.
All right, okay.
And it's bloody well closed at the minute.
All right, okay.
Which is a real pain in the arse. But I'm doing my press-ups and planks and doing lots of walks on Hampstead Heath. So I'm trying to keep fit like that, but I miss the gym terribly. I normally go twice a day. Go at 6:30 in the morning, and well, I've been a bit slack this year, but 6:30 in the morning, and then about 5, 6 o'clock in the evening for a second go. So without the gym, I don't trade nearly as well. So that's about all I do, but I'm certainly very aware of when I'm not up for it. And I've been at this long enough to know if somebody has upset me, for example, and I know I'm not up for it, just to leave it alone. So I think it's important that you can observe your own thoughts and just be totally honest with yourself if you're not feeling good. Okay. So
for those of you not seen David, I mean he's as fit as a young 18-year-old lad.
yeah,
and he can outbeat you in any run, I can tell you that.
I wish I'll be 65 in a week or two.
You definitely don't look like it, David. You're very, very strong and healthy, I can tell you that.
65.
I think now we can move on to the practical session, David. I know we are quite a bit tight on time, but if you can just show us just a little bit, like for 10 minutes.
Okay.
For 10 minutes, and then we can also then, for those of you on the Learn More, we'll tell you the places you can go to find out more about David.